This is the briefing for Friday, February 24th. In the past several briefings, I guess for several weeks, I've talked about the longer-term development of the stock indices, and one of the possibilities that I outlined was the fact that this appeared to be the potential for a three-step counter-trend rotation, where you would have leg 1 equal to leg 3, and that projected up to the 337 to 440 area in the spiders. As long as the spiders are below 410, below this level here, actually 410 up to about 420, as long as that is occurring, the probability of this being equality is minimum. Now, should the market reverse and turn and trade back above 410 and or 420, then that would make that the higher probability once again. But as long as we're below 410 in the spiders, that's going to suggest that the potential for this three-step counter-trend rotation, where there's equality between legs 1 and 3, is at a minimum right now. Now, it is important to recognize, and I pointed this out in previous briefings, this is a weekly chart of the spiders, and you can see on this rally through here, look what was happening with market breadth longer term. So you can see that breadth was declining. In fact, the lowest point was at the highest price, suggesting this divergence, and this was a pretty severe divergence, that there was going to be some type of turn back to the downside in the stock indices. Now, the question facing us is this a pause in this rally, or is this the beginning of another leg to the downside? And we just don't know that right now, although I will tell you that breadth opened up fairly negative in today's trading. Now, this is a weekly chart, so it shows that it closed at 1,277 shares negative. But if we look at really where we were at the open today, you can see that breadth opened at below 2,000 shares in the NYSE and about 2,600 shares in the NASDAQ. So we opened pretty weak in today's trading, and then of course we spent the rest of the day in rotation with a slight upward bias in the spiders and the Qs. We were basically spent the rest of the day in rotation. Now, what's important, as I said, this 410 area going up to about 420. Now, I want to point this out, that it's typical, and I think I did point this out in one of the previous briefings. You can see this area of rotation right through here, and it is typical. You can see a shorter term rotation here and a shorter term rotation here. Now, a lot of times when a market reaches a key reference area or a support or resistance area, it pauses. And typically the psychology behind that is that traders step back because everybody knows where these areas are, and they're not sure whether the market is strong enough to continue the downtrend that started here, or whether it's strong enough to continue the uptrend here. So they step back and wait for a break of these areas, and these typically give us areas of pretty good trade location. And you can see that breaking out above this upper extreme led to this rally. Breaking below this lower extreme led to this sell-off. So basically, what happens here is that as long as the market, or if I should say, if the market lingers at a support or resistance level, or what I call a key reference area, if it lingers there for a long time, then what happens is traders realize, investors realize, there's not enough strength to continue this rally, and therefore they start taking profits and the selling begins. And of course you get this rotation back to the downside. In this case here, you can see that the rotation occurred, but there was enough strength. You can see the probe outside of the upper extreme here, a retest of that probe, and then of course the breakout, another retest, and then of course the move back to the upside. So it's going to be interesting to see what happens here. Now, on a daily basis, you can see this is volume in the spiders, volume in the Qs is starting to pick up. And you can see that on this day here, this day right here, this was yesterday, we did get an increase in breadth up to about 1,000 shares. And then, of course, it was pretty negative in today's trading. Eliminated a little bit of this divergence that was going right through this area through here. Now, what's important going forward is now 390 in the spiders. That's support. That's going to be very interesting if and when we approach that area to see if we get a bounce off of that rotation back up to 410, or if we break that level, then that's going to open up trading down to 375, and below that then is about the 370 area. In the Qs, basically the same situation. We're looking at about the 295 area as upside resistance, and then of course support comes in at 280, and then below that is 260. Now for trade location, going back to the short-term chart, this is a 30-minute chart, the high of this area of rotation is certainly an area of good trade location, because that's going to suggest this gap's going to get closed, and the low of today, area of good trade location, because that's going to suggest that the continuation of the move lower is going to continue, and the same thing applies to the Qs or the NASDAQ. Now, looking at where we are a little bit longer term, this is still a daily chart, but you can see the rotational pattern that we've had here, projecting that potentially this could project up to about the 337 to 340 level, and you can see we're approaching this 392, 390 level in the spiders. Breaking that's going to be a significant event. And then of course looking at the Qs, you can see the Qs are holding up a little bit better than the spiders, but we're looking seriously below today's low for potential support at the 280 level in the Qs. And in the Russell holding up nicely, really right around this 190 level, which is a very important resistance level at this point in time. It wasn't an important support level. Russell showing a little more strength than the other two indices. Spiders showing a little more weakness than the Qs, but typically the Russell is a more speculative index, so it's going to be interesting to see what happens with the Russell trading above or below today's high in Monday's trading. We're reaching a point of being approximately oversold. We are oversold in the NASDAQ and the NYSE. We're not quite there yet. So this does give the index or the indices the possibility of continuation of rotation lower, or the possibility of some type of pause or rotation back to the upside. So it's really not giving us a good indication, not until we get to an extreme, but the NASDAQ is getting close to an extreme. As you can see, it was right through here. And then looking at total volume on the NYSE, you can see that total volume is beginning to decline, although you saw that the volume in the spiders and the Qs is increasing, but total volume on the NYSE is decreasing, and it is doing the same thing on the NASDAQ. So that gives me a little bit of concern that this rotation or this move to the downside is not becoming impulsive. It is not attracting new sellers, even though we're getting the gaps. It appears that because of this low volume that there are a lot of traders and a lot of potentially hedge funds that are standing aside, at least at this point in time. Now I want to go back to here. This is the new 52-week highs minus 52-week lows, and you can see that it has just turned negative 116 shares. So that is another, between that and market breadth, it does suggest weakness in the market, but volume is a little concerning, at least at this point in time. Now, I did have somebody ask me to look at gold, and I trade gold, GLD, periodically. I don't trade it very heavily, mainly because of this chart pattern. Now, you can see this is a weekly chart of gold. Goes all the way back to October of 2020. And you can see gold has really not gone anywhere. It's basically in an area of rotation. We had a slight move to the downside, and 1, 2, 3, 4, 5, 6, 7 weeks of pause right through here before we got this rotation back to the upside. 2 weeks of pause before we got the move back to the downside. And it appears that gold, or GLD, is going to rotate back through this range. I would suggest that the next level of support is going to come in right about here, right at the upper extreme of this area here, of this 7 weeks of rotation, right around the 158. Let's call it 160. The 160 area would be the next level of support in gold. Now, looking also, and you can see one of the problems here is with this move to the downside, this is volume in GLD, and it is falling off as well as the instrument trades lower. The other aspect, or the other question, was asked to look at oil. I'm going to use USO. So you can see USO going all the way back to October of 2020 was in an uptrend. And then, of course, it reached a high. This was in June of last year, 2022. So it started to sell off and now has paused once again. So basically, it's really difficult. Now, if you're day trading or swing trading, you can trade these ranges, although USO is in a much tighter range than GLD. But certainly looking to be short below 60 in USO and looking to be long above 80 in USO would certainly be looking for a breakout of this area of rotation going all the way back to June and July of 2022. And then, of course, we'd be looking for, if that breaks out, we'd be looking to take out this high. If it breaks to the downside, next level of support is going to come in right around this 4630, 4650 area. Going back to GLD, basically you can see that it is basically, in a downtrend, and we're looking at potential support coming in right around this 165 area, and before we see any type of potential move back to the upside. But what's going to be really important is this 160 area that is the high of this area of pause right there. It's going to be an interesting week next week, especially in the stock indices. I fully expect that we're potentially going to see a test of 390 in the spiders. I don't know about 280 in the Qs. They're just holding up nicely. So is the Russell. So it's going to be interesting to see which of these, in terms of intermarket divergences, is going to win this battle. Right now, I've got to be short this market. But I'm short with a lot of caution and not with a big position, at least at this point in time, until I see some shorter term strength to the downside or to the upside and we begin to test this 410 area in the spiders once again. Have a great weekend. I'll pick this back up on Monday.